listen-only mode.
Good evening, everyone. I make it just turned 7:30, so we shall get started. Thanks so much for joining us tonight for the Financial Management, the How-To session, a webinar brought to you by the Department of Employment, Economic Development and Innovation and presented by my company, the Creative Collective. I'm very aware the State of Origin Game 2 is on tonight, so I'm not surprised to see that so far we have a list of female names, presumably not rugby league fans. But yeah, thanks for taking the time, and we'll see if we get a few more joining us as well. If this is your first time jumping on a webinar, particular welcome to you. This is what we've got in store for you tonight. 5 minutes of just a quick intro, and then we'll get into some key points. These are key points covered off from the workbook, so you would have been provided with the workbook as a link to download as part of your registration. Ideally, you would have had a look at that, but if you haven't had a chance, just a reminder that it's got lots of great information, and I will be referring to it throughout the presentation tonight. Finally, at the end, I'll be introducing you to Melanie in just a moment, and you'll be excited to know that you get the chance to ask Melanie any questions you may have. Pretty awesome to have our very own qualified and experienced accountant online right before the end of the financial year. May save you a trip to the accountant or give you a few clues on what you should be doing before it's that time. So to introduce myself, my name's Yvette Adams, and I'm very proud to be a multi-award winning business owner. I've started 4 different businesses from scratch, 2 of which have been sold. So pretty interesting to just, start with absolutely nothing, and certainly had to look at the books and work out what I was doing right, what I was doing wrong, change things over time, and actually create something of value to sell at the end. These days I'm the owner and director, and we also have a franchise operation for the Creative Collective, and we work with startups right through the large corporates, both here in Australia and even internationally. I'm very proud to say I'm the mother of 2, mine are 4 and 7. And right now I do like to use this just little exercise to see that you're here with me. If you haven't yet clicked on the red button, there's a little red arrow, and if you click on that, it will expand a menu. Now I want you to click on the column that has a hand just to show me that you're here, you've arrived, and you've worked out how this whole thing works. So there's Helen's got her hand up, Susan. We will be using this throughout. Thank you, Jackie, and Jacqueline and Selena. If you could raise your hand, I'll know that you've worked out how to use this system, because we'll be asking for your feedback throughout. Just maybe keep looking, Jacqueline and Selena. You can always feel free also to text any questions or problems you're having to Jag, who's online to help you. Finally, I do love training and assisting others, so I'm very pleased to be sharing some knowledge and experiences with you tonight. Okay, during this little workshop or webinar we're doing tonight, we're aiming to teach you the concepts associated with developing a budget and cash flow budget, pretty important stuff, the links between key factors associated with profit drivers in your financial statements. It all sounds scary at this point perhaps, but it's all very easy once you know how to use your key financial statements to review your business performance, and how to use this information to develop business improvement strategies. And there's not too many businesses around I know of at the moment that don't need some improvement in some shape or form. Most of us are suffering in some way, whether it's from the natural disasters or from the economic climate. So it's pretty great that you've got online tonight to try and make a difference to your business. So right now I'd like to introduce you to Melanie. I was just commenting on her. She's here with me in our office on the Sunshine Coast. I was commenting how her hair is not that long anymore when she arrived. So you can just imagine that kind of cut up to her ears, and you've got an idea of what she's looking like sitting next to me and giggling right now. So you can see on there that Melanie wanted to be an accountant from the age of 8. She's been doing cash books since the age of 15, pretty much this accountancy thing's in her blood. And she became a partner of PJT Accountants age 25. She's very much got all the qualifications. She's also won lots of awards, so we thought we'd snap her up to share her knowledge with you tonight. And lots of experience in farming and manufacturing industries, super and retirement. So a huge big welcome to you, Melanie.
Thanks for that. Good evening, everyone.
So I just wonder if you could maybe expand on your little intro there on how, I don't know, financial management, what are you seeing at the moment? We sort of had a little bit of a chat when you got started tonight of who's coming through at this time of year. When it comes to finances, what are they looking for?
The biggest thing at the moment is, with especially in areas where the economies aren't doing as well, is people looking to make sure that they understand all the key drivers of their business and understand how their business actually works. I'm seeing a lot of clients that don't necessarily have enough sales to cover their overheads or enough gross profit from the sales that they're having. So a lot of people are looking for things that we're talking about tonight, the strategies of what do I need to do to break even and what should I be implementing now to improve my business going forward so that I can survive and have a profitable business going forward.
And just a reminder that we did just about 2 weeks ago do this a similar session but on a more basic level. So tonight sort of goes into a bit more depth, so if that's what you're looking for, you're certainly in the right place. So I want to introduce you to some of the key steps of financial management, and you can see them on the screen there. And I'd like you to raise your hand, and here's a pointer as well. Once you've raised your hand, you need to click on it to put it down. So I can see Marie's is still up at the moment, but for now, I would like to know, do any of you do financial planning at the moment? You consider yourself sort of already doing that sort of thing? Raise your hand if you are. Okay, so Marie is maybe, or no, she's decided to put her hand down. Thank you for your honesty. Oh no, and Cassandra and Helena, great. Who's doing forecasting type financials, looking ahead? You could raise your hand as well. Helena's, she seems to be pretty organised. And everyone else, isn't it nice to know you're not alone? Marie is as well. Okay, who's monitoring their financial statements? That's something I imagine most people do, Melanie. They look at their bank statements. Is that what that means?
No, looking at your financial statements is being able to understand your profit and loss and your balance sheet of your business. And I find that if people haven't been educated and had exposure to people explaining what it is, that's probably one of the basic things in business that you can do. And it's just getting someone to explain what it all means so that you can do all your planning and that from it. So a lot of business owners don't actually look at these, and that's where they become unstuck.
I guess that last point there is a pretty important one too, like just regularly reviewing how your business is going, because you get so caught up, don't you, in just trying to do the next thing and serve clients and wear all the other hats, not always looking at finance.
Yeah. Yeah, and it's important to know if you're on track or not on track and know what's happening as to if you are going to achieve the goals or not.
And you can see in the green square there's a pretty good reason to do all of this. You actually have a higher chance of surviving. There's that horrible statistic that says not many businesses survive past the first 3 years. But also, so many businesses don't grow at the rate they need to. Either they grow too slowly or some even grow too quickly. And sometimes those sort of trends can be picked up all through looking at the financial statements, can't they?
Yeah, and especially if you're growing, that's when your financials become most important, because it costs to grow your business, and you want to make sure that you've got enough cash reserves and funds there to keep growing, that the growth will be sustainable.
That's great. Okay, let's move on. I see some more people have joined us, so a welcome to you. You're not too late and you haven't missed too much. I will encourage you, if you have just arrived, to click on the red arrow, which will expand the menu. We do get you to interact with us by sending us little text chats, and also to place your hand up to indicate yes, that applies to you, and just click on that again to place your hand down if you want to participate, which we would love you to. All right, the importance of budgeting in your business. When we're going over these slides, I know you made the comment, this is really pretty important, and fancy that, there's a recession picture up there, there's a recovery. Everyone's really at that point right now, aren't they, wondering which way it's all going. It's not on the lesson plan, but can you comment, like any crystal ball gazing? Do you think we're on the up in the recession?
It's still really hard to tell at the moment. You'll have 1 week where you think things are improving, and the next week things will start to go astray again. I think it comes down to consumer confidence and business owners being confident in their businesses and what they're doing. One of the biggest issues at the moment is the two-speed economy, which you would have heard of in the media, where areas where mining and that is doing really well, but the areas of Australia where you're not exposed to the mining industry as much are probably struggling a little bit, and that's where with interest rates rising and those sort of things it gets quite hard. So yeah, I have tried to crystal ball. I don't think we're out of it yet. There's still a little bit more to come, but hopefully the new financial year will bring some new goals for everyone and a bit more consumer confidence, which should help.
It'll certainly bring focus if people are focusing on webinars like they are tonight, I guess, and going and sitting with their accountants and working where they're at. So talking in terms of budgeting, you can see on screen there's a few bullet points. Your budgeting can show the financial viability of a new business venture, and we talked about this a little bit last time, but in essence, Melanie, if you're looking at starting a new business or buying into one, you've really got to do your budgets, don't you?
Yeah, you do. You need to look at your budget because especially if you're buying into a business, a lot of businesses I see that people buy into, you need to do your budget for that business because your circumstances could be different to the person that you bought the business from, especially if you're going to have debt in the business. You might not work as much as they are, all those sort of things. My successful business clients all have a budget and they all monitor their budget every month, budget to actual, so they're actually planning something. Not having a budget is like getting on a plane or going to the airport and not actually having bought a ticket or knowing where you're actually going to fly to. So a budget is actually just a plan of what the business is you're hoping it's going to achieve. So then you've got something to measure if you are on track or you aren't on track.
I know it gives me a lot of confidence as a business owner. Maybe it sounds a bit geeky, but I find myself doing budgets quite regularly. Personally, I've had a lot of change buying new commercial premises, and every time you think you've got a control of the budget, other things pop up, so you've kind of got to do it again. But I always find once I've done it, my mind settles down and I feel a lot more comfortable with where I'm at. I mean, even for peace of mind, it's a good idea.
And that's the biggest key to a budget. It gives you that peace of mind. It gives you that tool that you can make decisions comfortably. So you know that if you haven't sold enough this month, you know what the problem will be with your cash flow next month or the month after, depending on how you collect the cash. If you're operating blind, you don't actually know if you're having a good month or a bad month or if the business is tracking well or not. So it just gives you that sort of thing. I'm also noticing that the banks are requesting more and more having budgets and cash flows from clients so that the bank can be confident as well with what you're going to be doing going forward.
And they may back you up if you've got that budget to prove you're on the ball and know what's happening.
Yeah, and it's no different to your personal life. You'd have a budget in your personal life if you're on wages to know that if you've got this much in wages, this is how much you could spend. So it's the same for the business. This is how much we have to spend, how much do we need to turn over to cover those costs.
I'd also like to highlight at this point that there's a really great DD resource. If you're sort of needing some templates for budgeting and all this kind of financial thing we're referring to, there's a resource called Think, Plan, Grow. You might want to write that one down, which is a business planning tool. It's a CD-ROM. So you've got business planning templates, sample plans, formatted financial spreadsheets, and you just have to key in the numbers. So you can go looking for that on the DD website, which is business.qld.gov.au, which I think I'll get Jag to text you through. But that's pretty much where you probably would have registered for this actual session. So there's three different types of budgets we better mention here as well. That there's your projected profit and loss statement. You've got your projected balance sheet and your cash flow budget. So do most businesses have these three budgets? Should we have all three?
Normally you'll have the profit and loss and balance sheet you can normally combine into one budget. The only difference is the profit and loss you'll have up the top, and the balance sheet is when you're paying for things like if you need to do new capital, buy capital items and those sort of things is what you'll budget for there, or paying yourselves out for loans or repaying loans to the bank. And the cash flow is important as well. So you need a budget and you need a cash flow. The difference is it's no use budgeting if you get your money in 60 days. Your budget might say that you're going to be really pretty, but you might run out of cash because your cash flow says, well, you don't get the money for 60 days. A statistic I saw recently was that of the majority of businesses that failed, most of them were profitable businesses, so doing well, but they just run out of cash. So that's where it's important that you have both. It's no use budgeting then if you don't actually get the money in to be able to pay for things.
Good point, because yeah, I'm certainly hearing some horror stories of very successful businesses, but they're just running out of cash, as you've said. Now, sales projections, it's one thing to know what your budgets are, what you expect to be kind of going in and out, but forecast when maybe you're anticipating getting new work in, you sort of touched on this earlier, you've got to be really crunching these things down, don't you? So how many new customers, how many might you lose? You were talking conversion rates as well earlier.
Yeah, so this is where your marketing and your sales strategy combined with your cash flow and your budgets. So you need a marketing strategy to know, well, once you've got your budget, you can work backwards to go, okay, well, if I need to turn over 200,000 this month, what do I need to be selling and how many clients do I need to be selling it to? It may not work out exactly, but at least you know, okay, well, this is what I need to do to achieve that, and you've got a plan. It also helps if you've got team members to get them involved, because then they feel like they're controlling the outcome as well. So get them involved with the planning so that everyone's on board as to what you actually need to achieve. So if you're a dress shop, you might actually do it on, I need to sell $1,000 worth of product every day to achieve my budget. So it's all dependent on those sort of things. Conversion rates are great if you've got salesmen or you're doing a sales process. It's no use being out there, and I see a lot of building businesses at the moment, they'll quote a lot of things and they might only win 10% of what they quote. Well, all of a sudden they've probably got extra staff members on because they're probably quoting things that they would never have won anyway, and they're just desperate, or then there's something's wrong with their quoting system. It's no use quoting lots and lots if you're only winning 10%. You're better to have a better conversion rate and quote less but win them, because it costs you a lot of money to do these quotes and that if you're not actually converting something.
That's a really good point. And I guess another one would be that if you're making any big change in your business, or even particularly when you're at the start, I can share an experience from when I looked to start the franchise arm. I really didn't know how much I would make from this franchise, or what I could even tell these franchisees who obviously wanted to know what they could make. So I went and sat with Melanie's company, and they did some great sales projections of what my franchise might do, different scenarios. So just a word of advice there to perhaps seek financial professional assistance if you're not one to crunch numbers and you just want, I guess, another pair of eyes that can look at both figures with you.
Yeah, most of my clients, once they've got these in place, it's easy just to implement it. It's just having someone to challenge you and to get you out of your comfort zone to go, okay, well, what can you actually achieve? What can you do, and what do you need to do to achieve this? There's no use setting a budget of $200,000 if you've only ever turned over $100,000 and you haven't actually got a plan of how to turn over $200,000. So it's having those sort of plans there as well.
And would it be fair to say that it's pretty common for business owners to be quite optimistic, probably, saying their conversion rates are higher than they are, or that their sales forecasts are higher than they probably realistically will achieve?
You need to measure it. That's the key at the end of the day. If you're not measuring it, you're not actually going to be accurate to what you're achieving. So once you actually have these plans, then you need to measure what you're doing with your plans. And that's where you'll see, okay, this is working, that's not working, and that's where you can adjust things. It's no use spending a lot of money on marketing if you've never measured where your business is actually coming from, because it could be that if you're spending a lot of money advertising in the newspaper and you never get one lead, well then you'll know to stop that because it might not actually be working, or you need to adjust it. So that's where measuring all these things helps as well.
Absolutely. I met with a business just yesterday and I asked him how his marketing was going. He said he was in the yellow pages, and he said, I don't know, I don't measure it. And I said, well, that's where we're starting with the marketing then.
Yeah, definitely. And that's the key, is you can't manage what you can't measure. So once you have these plans, then you can manage them all.
Okay, on to another concept, which is these key profit drivers. Now, hands up if you attended the Strengthen Your Business webinar by any chance, which is another topic we ran. We did talk about Helen. Good on you. You're a regular attendee. There was a concept we did talk about in a past webinar, which is available for download from our YouTube channel, which Jag can text to you. But looking at profit drivers, there's some scary, I get scared, Melanie, to be honest. I hate maths and I see calculations and formulas and I just think, oh no. So do you want to take us through this? I'll just hand it over to you.
Yeah, no problem. So developing your sales is the new leads you get per year, your conversion rate, times average order value. So for example, some businesses you might have existing clients, so you might sell products again to them. So if you look at my business, I can measure mine in two ways. I can measure my existing clients, how much I convert, how many of them stay on to come back for the next year, and then the average sale that I do to clients. So it might be every set of financials is an average value of $2,500, so that would be my average order value. Then if new clients come on board, it's how many new clients do I have to meet with. So this example here has 700. They convert 70% of those. And then the average sale is $100. So then it's $4,900 is what the extra would be. So you need to do these calculations for your business, because then you know from your marketing, well, how many new clients do I need to be attracting each year? How much, if I'm converting this many and my average value is that $100. And that's when then you can work with your accountant or work with a business advisor or work with a mentor and go, okay, well, if the 4,900 is not the number that you want, you've got a few options. You can either increase your average sales value, which might be through having extras, similar to what McDonald's do. They're the king for doing
Upsells,
that. Yeah, so having an upsell. having, which is, do you want fries with that? Do you want a drink? That sort of thing. So all of a sudden the average sale value goes up. You might work on your sales process to make sure that you're converting. And the only way you can work on your sales process is by measuring it to analyse, why did I win the sale? Why didn't I win the sale? I never see anyone who's got a 100% conversion rate. And generally, if you did have a 100% conversion rate, perhaps you're too cheap, or you're absolutely the best salesman and you never talk to people who don't really want your product. And then the last strategy is looking at new leads. Well, if you don't have enough leads, what marketing and that do you need to drive interest to get people to come and see you? So it might be advertising, it might be social media, or what you need to do to get people interested in your product to ring and inquire about it, or to come into the shop, and all those sort of things.
That's a common one I find, is people wanting the new leads, and that's why they talk to us. But the conversion rate and the average value is really can affect the bottom line so much as well.
Yeah, and sometimes you don't need, it's a lot of work to get new leads, so it might be cheaper just to, one, fix up your conversion rate. So that's looking at, before you spend a lot of time doing a sales quote or that sort of thing, is making sure you know who your ideal client is and that you are only quoting for your ideal client. And the last one is looking at your average sale price. So even if you increased your prices or you added more extras onto it, all those sort of things will increase that average order value.
Pretty important concept, that one. Who finds that quite useful and is already getting ideas of just one of those formulas they might look to improve in their business? If you want to raise your hand, make sure you're still with us. You haven't been distracted by that game that's on. Thank you very much. All right, on to break-even point. Oh, now they're all up the hands. You are still awake. Good, good, good. Okay, the break-even point. Now, we have covered this in the past financial Back to Basics webinar, but let's have a look at it again. Pretty important concept as well. So this is the volume of sales you need to cover your costs. So you're not going to make a loss. You're not going to make a profit. You're just going to break even. Hands up, people, if you know your break-even point right now, today. Great. That looks like about half of you. That's probably a little bit higher than usual. So you can see you need to work out do a break-even analysis. So is your fixed cost divided by your selling price minus your variable costs. I bet you could probably explain that a bit easier, Melanie.
Yeah, probably the easiest way to do it is your fixed costs is things like your rent, anything you need to do to open the doors on the 1st of July, that if you had not one sale you would still be paying if you had everything standing. So would be your wages, your accounting fees, bank charges, interest to the bank on loans, rent, electricity, all those sort of costs. Then once you've got those costs, you know how much you need to sell for the year to cover those. But it's not just what you sell, it's what profit you make from each sale. So if you sell something for $100 but it costs you $80 to sell it, to purchase it in that, well, it's only $20 that you're actually making in gross profit. So that's what the selling price minus the variable costs equal, is that's your gross profit. So really it's what gross profit do you need to make to cover your fixed costs. So that way you know how much you actually need to break even. That's where people get themselves caught out sometimes, is they'll either be not selling enough, and a lot of people are finding this at the moment, or people are cutting costs. So I'm seeing people who are doing things at cost. So if it costs them $80 to produce something, they're actually selling it for $80, which in the end of the day is not helping them cover their fixed costs. So you need to make sure that you're mindful of those fixed costs that you need to cover as well. Because otherwise, if you're only breaking even on your gross profit margin, there's no chance for you to get ahead.
And once again, hopefully combining this webinar and the workbook will allow you to go away and work out your break-even point. But if you're still feeling like you need a little bit of help with that, do turn to some kind of financial professional that might be able to help you crunch those numbers. How much cash does a business need? Well, we all want more usually, and we've already been talking about businesses running out of cash and that being the biggest killer, and that being the reason why people are just falling over at the moment, unfortunately. So there's no single answer, but preparing a cash flow budget can help. So looking at your price, the likely sales at that price, and the timing of not only the receipts but also the payments. I know for our business, and I was talking to you about this before we got started tonight, that we're certainly billing a lot but finding that money's coming in slower, and that is hurting us a little bit right now. Yeah.
Yeah, and that's definitely something to take into consideration. It's all the things such as if you're buying stock, so if you're something like a shoe shop, if you have to pay for your stock in March but you don't actually sell the stock until June, well, you have to have some way to be able to fund that difference and fund that timing. And it's the same if you're in like Yvette and I are in service businesses. If we're paying wages and that and the staff are taking longer to get the job out and then we're getting paid longer, well, we still have to cover all those costs until we actually get paid. So it's making sure that you have a good system in place to make sure that all those things are covered off. And that's the only way you know these things is once you've got a cash flow to see that, okay, well, it's all well and good that we make the sale today, but if we don't get paid for it till 6 months' time, how do we wear the costs of things that we have to pay along the way? And that's where the best thing is if you can get your payments and receipts to be timed similar. The best is if you're actually getting the money and then having to pay for things later, because then you're actually not got that deficit at all. But it's timing things, and it gets trickier and trickier the more complex your cash system is. So you're in manufacturing or that where you have to buy stock and then pay to manufacture it, then market it and then sell it. Like you've got such a long process that you need to have a lot of capital behind you, and you're not going to know that unless you've got a cash flow to tell you, well, what capital do I need to be running to do this? And that's where the cash flow is very important.
Sure. I'll leave it there and keep moving along in the interest of time. A debtors and creditors analysis is something else you could do. There's some workbook examples in that workbook I referred to, so I'd really encourage you to go away after this webinar when you next get a chance and review these. You would do debtor and creditor analysis for clients quite regularly, wouldn't you? So what are you looking for? What does this process involve?
Yeah, so what the process involves is it's just working out how many days does it take for someone from when you invoice it to when you get paid and what your average time is. Debtors is one of the most important things in a business because that's how you get your money in. A lot of people go, oh, I can't do this in my industry, I had people who said that in the accounting industry you have to do 30-day payment terms. Well, my business is a discount if you pay up front or 7 days payment terms, and I haven't had one client question me about it. So all of a sudden I'm getting my money in 23 days earlier than my competitors, which has to help with cash flow. So I'm noticing a lot of people are starting to buck the trend with what they are doing, and that's where you need to look at. It's your money at the end of the day, you've made the sale, how can you get the money in as fast as possible? And then creditor analysis is how long is it taking you to pay people, and do you have enough money there to pay the people?
I know we've fallen into the trap as a business of trying to do the right thing, being diligent and paying bills at the moment they come in, but we're suffering because people don't always do that for us. So it's finding that balance really, isn't it?
Yeah,
that you're
definitely.
not paying too quickly but not too late either.
And using your payment terms. If someone's going to give you 30 days, use the 30 days.
And you can see on the screen there too, some software will actually help you analyse. We use a system called freshbooks.com, and it'll actually tell us on any given client's file how long they usually take to pay. So we know if we're entering a new project with them, a new contract, that, you know, even though we bill them and our payment terms are also 7 days, they're pretty likely going to pay by 30. And certainly we do some jobs, and I don't know if any of you out there are like this as well, for councils and other sort of organisations, and they will pay on their terms too, and that's something you enter knowing when you start those jobs.
Yeah, definitely. And I know with businesses I deal with in that as well, if someone's traditionally a bad payer, that's where you need to change your payment terms and say, okay, you've been a bad payer, you need to pay up front. Otherwise, we're not going to deal with you, because you shouldn't accept that they take a long time to pay all the time.
Sure, good point. Okay, on to an annual cash flow budget. I presume this is a really good time of year to be doing this kind of thing, looking ahead the next financial year.
Yeah, definitely. This is the time where you can plan out the next year. As an accountant, we always say that you get 2 new years, so if you haven't been successful the first part of the new year, you've got a new year to start it again. And it's perfect time to get the plan in place. If you've got staff, share it with the team. If you've got business partners, share it with them, so you all got the same goals going forward, and you all know what effect everything's going to have. So simply it's cash inflow, so money coming in, sales, that sort of thing. Outflow is your expenses, and when you have to pay them, gives you your net cash flow. So once you know what your opening balance is of your bank account, you'll know how much cash you should have in at the end of the day. And the key is that if you don't have an overdraft, if that's going negative, well, you know there's going to be an issue that month. And that's where having this and using it to continually measure and monitor, you can pick up if you are going into the red or not.
Speaking of picking up how you're going, is this really important concept of key financial performance indicators, also known as KPIs. So as a business, we monitor quite a number of different KPIs, and any business should be. I guess tonight the important ones are financial, but you can certainly monitor non-financial ones too. To give you some ideas, because we offer services, we might monitor the number of invoices we've raised, the value of those invoices, the average value per invoice, similar to the quoting that we're doing. But we also monitor things like marketing, how big is our Facebook, growth, what's our website traffic, how many inquiries are we getting online, on phones, those sorts of things are the non-financial ones. But what are the sort of financial KPIs that you think every business should be looking at? Is there a top 5 or anything like that?
Some of the top ones is your sales, because that's what you want to target at the end of the day, is the income. Your gross profit percentage, which is what I talked about before. Some might measure if you've got staff and that sort of stuff, productivity, so that you're measuring the efficiency, how fast. Other debtor days is always important, how fast are you collecting the money. And then it's just getting things that relate to your specific business, and that's where you need to start looking at your financials and asking people, what should I be monitoring, so they can give you those ideas, because I know there's a lot of different things you can measure, and it's just having the right things. I know we measure new clients and we measure sales conversion, all those sort of things, and that's how we know if the business is successful or not.
Is there any guide on how many KPIs you should be tracking? Because you can also overdo it, can't you?
Yeah, you can't do too many. If you get 5 key ones for your business, that's probably a good starting point. And then you can measure things that go into it. So I know for my business, my major KPI is budget, is that we hit the sales target. But behind that, I always measure productivity and average hourly rate. Because I know for my staff, if they're doing the hours and billing the hours that we've budgeted for, and they're billing it at the value that we think they should, the average hourly rate, they'll easily achieve the budget. Whereas if their productivity is down, they'll have to be billing at a higher rate to be able to achieve their budget, or if their average hourly rate is down, they have to actually work more hours to achieve the same budget. So that's where if you measure the things, the inputs that go into that, then you can measure what's happening.
We were also talking about earlier how I've just implemented as a company time tracking, and you were saying how common that is in your sort of industry. It kind of is in ours, not always, but I'm really curious to know, how that pans out and what productivity really is, and whether we're billing and quoting well enough on our hours as well.
Yeah, and it's not necessarily used as a billing tool. It's used as measuring time measures efficiency. So then you can look at things and go, well, if this is taking 10 hours to do and I'm only charging $100 for it, 1, either I'm not charging enough, 2, is it really something that I should be doing, or 3, is there a better way we could be doing it, so you can help staff become more efficient and more productive with what they're doing.
Or does the staff need some more training or new procedure or a procedure at all? Okay, so monitoring financial plans and performance. Action plans are a good idea, so that's where you would have some kind of spreadsheet saying who's going to do it, when they're going to do it, what they're going to do, and set a time frame on there. Financial benchmarks, we've sort of talked about some of those. I do want to highlight, however, though, that there is on the DD website some IBIS reports where you can get some benchmarks of other industries. So let's say you run a fish and chip shop. I believe there's one on retail takeaway stores that you could go and see how does my business perform financially against what is the benchmark in the industry. So not every industry will be covered. I found mine wasn't particularly, although I haven't checked it recently, but certainly that would be worth going and having a look at too, to check how you're performing and setting these targets we're talking about for the next financial year. Ratio analysis, what does that mean exactly?
A lot of ratio analysis is similar to your KPIs. Ratios could be your debtor days, could be a liquidity ratio, so do you have enough cash assets to pay any debts that you have fallen due in the next 12 months. So it just tells how your business is tracking, and that's what they'll generally use in benchmarking is the ratios, and that's where you can measure. So the biggest ratios I use is your current ratio, which is looking at do you have enough cash to pay for your debts. Your gross profit margin, because that's are you charging enough or are you efficient enough, and your debtor days.
Excellent. All right. I do want to make sure we've got enough time for questions, so I think we'll keep pushing on. Now, markup versus gross profit margin, you did mention that this is sort of a little bit more of an advanced concept to consider. My spin on this is that people often come up with a price for what they're going to charge for their product or service, and they sometimes just pick these figures out of the air, don't they?
Yeah.
They haven't really analysed the figures, and often when they're discounting, they don't realise how much that's really impacting on their figures. They think there's still a margin, but there sometimes isn't.
Yeah, and discounting, if you discount, you have to actually sell more at the end of the day, because you're making less profit on each sale. So that's where you need to be careful of getting into the discounting wars, or whether you're going to sell on quality. So it's being aware of what that actually affects, and it's knowing how much you're actually making on each product, especially by the time, things I notice people forget is to add in freight or labour, all those sort of little things that add on to it. And you need to make sure that your markup is going to actually give you a gross profit that will actually cover those overheads. So you need to know your break-even point, so then you can work backwards.
And there's really no guide on these figures either, is there? It just varies so much from industry to industry.
Yeah, it varies industry to industry, and it varies salesperson to salesperson. It's what the customer will buy at the end of the day, and what value the customer sees in the product.
But one action point for all of you out there would be to take these formulas away, apply them to your own business, and work out your markup and gross profit margin for your company. I'm sure you'll very much impress your accountant, but also to, again, give you some peace of mind of where you're at and whether you need to make some changes. Does anyone already know, out of interest, their gross profit or markup? They've already worked that one out for themselves and all over it. Definitely silence around. That's definitely an action point for everyone there, I think.
Your gross profit's one of the most important things I know I work with clients on, is understanding what your gross profit is and understanding what you need, because if that varies, that can cause a lot of issues for you. And it's making sure that you include your labour component and that into there if you're in manufacturing or sales or those sort of things.
Sure. All right, on to financial ratios. So we've got profitability, liquidity, financial soundness, and business activity. And what do you know? They're all overlapping each other. So how do these ratios apply more to certain businesses? Because some of those circles apply to more certain types of businesses, right?
Yeah. Some businesses it's more of an issue. Like liquidity might be more of an issue for a business where liquidity is how much cash you've actually got in the bank to pay for things. So a business that has a lot of, like a trucking company where they have a lot of capital items and that, their liquidity might be a lot lower than, say, a business like mine that doesn't have a lot of stock or anything like that. So it's having a look at what your business is and how liquidity is and how much extra capital you need for the business. Profitability, every business is different. People always ask me, what's the rule of thumb of profit? At the end of the day, profit is what the business owners expect as a return from the business. So generally my rule of thumb is you need to, at minimal, expect more than what you would get if you invested the same amount of money in the bank. But generally it's a lot higher than that, because it's a lot higher risk that you're taking as well with a business. Business activity is things like your marketing and all those sort of things, what's actually happening, and financial soundness is that you can pay your debts, that the business is sustainable and has a future.
Okay. Interpretation of ratios, so comparing each one, 3 ways to make these comparisons. Time comparisons. I personally really find that interesting, and I think financial year end is a good time to be doing this. If you're actually checking, year on year, if you're a very new business, obviously you don't have the benefit of this, but if you are tracking these figures through, come next year, you'll be able to look and say, how has this month, this June, this May, compared with last May? Is it up? Is it down? And I know, for instance, I'm rubbing my hands and expecting a big sort of July and August, because for us we find that people get new budgets and they come out spending on marketing. So we're looking forward to that period when it's quite quiet now. So that's certainly a benefit of time comparison, isn't it?
And I think time comparison is generally better than actually industry benchmarks, because benchmarks, there's a lot of factors that can go into it. Like it could be that I know for a business on the Sunshine Coast compared to a business in Brisbane, there could be very different benchmarks that are set. So if you're actually getting benchmarking reports and you're not quite sure what data and that's being used, you could be actually aiming for something that isn't realistic if you're not 100% sure that it matches exactly to your business. So that's where time comparisons does work. And also time comparisons work because it's your personal goals for your business as well. And there's general business standards, and that's what you'll notice the banks have. The banks will set standards for each industry with debtor days and profitability and all those sort of things. And that's where if you're going for lending and that, you need to ask your bank what criteria are you marking on, because that's how they'll then risk rate you, which will then affect your interest rates and those sort of things.
And certainly the ATO has a little bit of an idea on their business standards, and if you're performing much better than they expect you to, they may start looking into you and doing audits and things. So yet another reason to have your finances on track.
Yeah. And even if you're doing worse, they actually will audit you as well, because they'll think you're taking cash.
Right.
So I've seen quite a bit of that audit this year.
I hear they're doing a lot of auditing, aren't they, at the
Yeah,
moment?
the tax office has quite a big budget for auditing at the moment, so they are checking industries.
All right, good warning for us all to keep on top of all that record keeping. Be diligent. All right, Melanie, can you give us some examples of how you can incorporate this financial benchmarking? So we've mentioned the IBIS benchmarks, and you've mentioned very importantly that you can't necessarily compare a city to a regional area and then industry by industry. But, you know, once you know these benchmarks, what could you be doing? Setting targets with them?
Yeah, this is how you set your goals. So it's similar to KPIs and that sort of thing. This is how you set your goals and your targets for each period. And that's where you need to get everyone involved that you're actually achieving it, so that then you're tracking where you're actually going with the business. And that's sort of the key at the end of the day, is once you've got the goals, then you can actually track to see if you can achieve them. But it's understanding how these ratios work so you can understand what you need to do to achieve them.
Because I always see it, people, you know, starting out these businesses with starry eyes, and they set such high goals, or sometimes not always realistic. But by getting real, by setting these benchmarks, by setting these targets, you'll know where you're going. I really like that analogy you used of going to an airport. You know where you're going, that you've got your travel insurance, you've got your maps,
yeah,
and you should be in for a good flight, really.
Yeah.
First class.
Yeah, and that's the key at the end of the day, is this just gives you that basis, that peace of mind that if you're not achieving things, you know what financial effect and that it will have on your business. I see more people disheartened and finding it a struggle in business because they don't actually know. The ones that actually know will then know what help to get. Whereas if you don't actually know these numbers, it's hard to know what help to get and where to go and those sort of things.
As you were saying earlier, you've seen a couple of cases recently where if they'd only come to you 12 months ago, you could have actually helped them. But
yeah, definitely. It's helping people understand these numbers and understand what they need to do and put in place to achieve them. And that's where you can help earlier. Sometimes it's just too late. There's not enough time to put things in place to actually recover the business.
So another, I guess, word of advice there would be, as soon as you feel like you need that help or anything's not on track, go and see someone about it.
Yeah, and the biggest thing I see is people think that it's like the elephant in the corner of the room, that if they don't say anything, no one will know they're in trouble. People know, people can see. There's classic behaviours and that you see with people. So it's asking, not being afraid to put your hand up to help, to ask for help, because there'll be lots of people out there trying to help you. I know on the coast there's lots of chambers and business women's networks and that are providing stuff to help people. Dee providing seminars, and they provide a lot of help as well. So there's lots of resources out there to get the help. It's just asking for it, really.
Certainly the DD regional offices, because they are literally all over Queensland, and they have staff members who will even come to you in some cases, are a good one to turn to if you're just not quite sure what to do and who may be able to help you. And I will give you a 1300 number as well in just a moment. We're just down to the last two slides, so thanks for hanging in there with us. This last thing we're going to look at is profitability ratios and liquidity ratios. I do feel like we've covered this a little bit. It's just another way of looking at it. Any other final points on this kind of stuff?
No, they're probably what we've talked about already, and that just gives you some more ideas of things you can look at as well.
So I guess that's one to take away. If you're wanting to become more profitable, look at some of the circles on the left-hand side and what you could be doing. If you're wanting to improve your cash, you can look at some of those circles on the right-hand side, just remembering that that word liquidity means cash. Okay, so tonight we've gone through a fair bit. We've looked at financial budgets and cash flow forecasting, cash flow budget activity, looking at key financial performance indicators or KPIs to analyse your business performance, working out your financial ratios and what's the actual health of your business, benchmarking and seeing how you're comparing to past years or other people in your industry or area. And then it's all about putting this stuff into action. It's one thing to get on these webinars, but it's quite another to go away and do something with it. But look, you've got 2 weeks till the end of the financial year. like Melanie said, you've got 2 chances at this financial year. I like that idea as well. So if it hasn't been so good for you the first half, then let's look to improve it in the second half. Now, this is your big chance to ask questions. If there's anything we've covered tonight you didn't quite understand, or you just have a question you'd like to ask about your business, myself or Melanie, probably Melanie, if it's accounts related, I'd be more than happy to answer it right now. So, Jacqueline, I can see you've got your hand up. I'm wondering if you'd like me to unmute you. I'll unmute you and see if we can get you. Are you there, Jacqueline?
Yeah, can you hear me okay?
Sure can. Have you got a question for us?
I do. It's probably, I'm not sure if it's relevant to this. I'm just wondering, I've only been working from an Excel spreadsheet, and all these statistics on how to figure out how many sales you're doing of specific items, because I'm a service person as well and I provide different services just from myself working from home.
Sure.
Yep.
And I was wondering, pardon?
Yeah, go ahead. We're listening.
I was just wondering if it would be better to have some sort of MYOB program or something like that that would help me to be able to get these statistics easier, so that it's less time that I'm wasting and more time that I'm actually doing the job.
Yeah, definitely. There's lots of programs out there. The key is asking your accountant as to what they would recommend. Because I know with my clients, I use Mild for some higher end. I know there's cloud accounting products like Xero and that are out there now, which actually give you KPI reporting and can help with these sort of things. Excel, it can still work as long as it's set up in a manner. So if your Excel's set up in a user-friendly manner, and maybe your accountant can help you with that, there is ways you could pull this data out. I know my business, up until a few weeks ago, we'd been using Excel to track our sales and sales conversions, but we've just started a CRM to do that. So it's just whatever's easiest for you, but it's working with your accountant as well to make sure that it's something they recommend, and it's finding something that's not too time consuming in data entry and those sort of things.
It's probably up to personal preference a bit too, Jacqueline. I mean, personally, I didn't enjoy doing the bookkeeping part of my business, so it was one of the first parts I outsourced, and then I found it was easier for me to keep a track of what they were entering and how my business was performing by using a cloud solution that I could log into any time. So it probably depends on what stage of business growth you're at as well, but yeah, like Melanie said, you could get the Excel formulas going on, but you're going to be limited to what sort of analysis and extraction you can really do. You may need to look at more sophisticated softwares.
And how do I compare that? And because I've not done any of that before, I've always worked for somebody else.
Sure.
So how do I find out what me?
Well, some of those programs we've sort of touched on, they literally have reports you can print out. So you click a button, and provided the data that's entered is up to date, you can print your up-to-date profit and loss. You can print, you know, comparison charts and all sorts of things, month on month, etc. I would just encourage you maybe to get some free downloads and experiment with some of them. Do you have a preferred accountant that you're working with? Is there a system they prefer you to use?
Yeah, but she's quite an intelligent accountant, and she said whatever I prefer, and that's the problem, is that I don't have a preference because I've got no experience.
Well, that's probably just saying, look, I don't know what would be the best one. I just want something that's really easy, user-friendly, and has minimal time for me to do the data entry. Like Yvette said, I find most clients bookkeeping is the first thing that they outsource, just for the fact that you're better to sell your product that you're good at selling, and bookkeeping sometimes quite time consuming for the return. But maybe if you get a program and have a go, try either Xero or Mild or QuickBooks or one of those, or one of the other cloud programs that are out there, and then your accountant will help you to say, okay, well now you've got this is how you can pull the figures out. Because often we just assume people will know how to do them, so it's just asking the question to say, look, I really don't know, what do you think?
Yeah, and just try them. You'll know, like once you get onto, say, Xero, you'll know if you like the interface, and once you play around with Mild, you may find it easier or not so easy. Ask some of your maybe people in the industry what they use and why as well, because, you know, if they're similar types of people, peers, chances are you may like what they like as well.
Okay.
Is that helpful?
Yes, but I guess I just have to go on the in the internet just to play with them.
Yeah,
See
as I'm sure you'll appreciate, we've got to sort of be seen to remain impartial in these circumstances too.
Ask friends and family as well of what they're using, because then all of a sudden I know if I've got clients using a certain product and their friends use it and that as well, all of a sudden they've got someone else they can ask if they need help. So that's another way there.
I know a lot of people have said that they've used QuickBooks and they don't like it, so if they don't like it, I probably will have a lot of difficulty as well.
Yeah, and just don't overthink it. That's sometimes people get quite concerned with financials and that sort of stuff, but if you keep it at the basic level, you'll be surprised what you can actually do and how good a job you can do. There's also, for a lot of the programs, that you can do TAFE courses or online webinar courses, things like that, to learn how to use the program properly. So sometimes that's a good investment as well.
Great. Thanks. That's all the questions that I have at the moment.
You're welcome. Good luck for the new financial year. Okay, that was great that Jacqueline got the ball rolling with a question. Mind you, it's a great opportunity to ask Melanie anything you've got to ask about accounting, your own situation. You could just raise your hand, or you can always send in a text chat message if you don't have to have a microphone. We can certainly take a look at that. Okay, Susie England has a contribution. This is why these are great in the group forum. We can all help each other. Susie England, who's another participant, said, I'm a novice and found QuickBooks much easier to understand than MyOb, and the help desk is excellent. That's a really good piece of advice, Susie, and you know, having a good help desk is certainly something that might be the winner for you. That someone in Australian time and in an accent you can understand, etc., that can always be helpful. Jacqueline saying thank you, Susie.
I actually find clients find QuickBooks quite easy to use just because of the terminology and how it's set out. So it's just asking people.
Come on, I'm sure some of you have got questions to ask. We had some feedback last time that people wanted more time to ask questions. You've got all the time in the world, so make the most of it. Any silly little thing, no question is a dumb question. Okay, Helen Atkinson has texted us. Do you have any suggestions for forecasting sales for budgeting purposes when you're selling a service where there is a huge variety of outcomes for jobs, including parts and labour? That's an interesting one. What do you reckon, Melanie?
At the end of the day, and I know this is, like Helen, you've asked the question that I get from clients all the time. They're like, well, if I budget, what if I don't achieve it? It's sort of like having a plan and just going for it then, because you will have variables where it can be hard to achieve and that sort of stuff, but at least if you know what you need to do, then you can work backwards. So I'm working with a client at the moment who sells big commercial generators and that to the mines. So they're exactly got the same issue as you have there, where it's long lag time and that sort of thing. But at least we can work backwards to what activities they need to be doing now and what proposals they need to be sending as to what their outcome will be. And then I know that if they sell something with a lower gross profit margin, we know that we have to sell more of those then that month than if we sell something with a higher gross profit margin, because they'll make more profit at the end of the day. So it's using it as a starting point, not necessarily getting hooked up on the whole outcome of it. Use it as a starting plan for you and then work from there. But it is something that is quite hard sometimes to get your head around, and I know my business is the same. We sell services and a lot of it's business advice services, so it's dependent on what people are needing help with at the time. So we just plan, and then we know if we achieved it or we didn't achieve it, why we did and didn't achieve it.
Yeah, I should go plan. Okay, thanks for that question. Does anybody else, here we go, Jodie Ahrens has asked, is there a website where I can go to download KPI formulas? I'd love to see something I can import into Excel, plug in some info, and have it easily produce some graphs, etc. each month. Well, I don't know for sure if it's specifically got the KPIs in it and the pretty graphs that you're looking for, but I'd certainly encourage you to look for the Think, Plan, Grow CD-ROM available on DD's business.qld.gov.au, because I know it does have quite a few financial type templates that they've made with the small business owner in mind. So go and check that out. If there is a fee, it's very nominal associated to get that.
I know QuickBooks has some, and they produce graphs, because I do have clients that use those. I'm not sure if MyOb has any. But the other option is just to Google it, and often you'll come up with different things on there as well.
You would Google something like Excel template sales forecast or something like that.
Yeah, or key performance indicators,
Mm-hmm.
and see what is out there for it. And then you can manipulate it down for yourselves. I know we've made our own for our business, and that we use with our team all the time going forward. So generally, I find with clients, it's once you've worked out the KPIs, it's making something that suits your business and your team, and then using that going forward.
And you kind of got to keep changing them too, don't you? Like you can sometimes think you've got it all going on, and then you start realising you'd like to track it a different way, or
yeah, and that's the key with business. It's all about learning. So you might start tracking something and focusing on something, and then go, well, maybe that was the wrong focus. We didn't achieve the outcome we wanted. Maybe we need to focus here or there. So it's just giving things a go.
I know we've certainly been discussing as a company that we need to, perhaps start tracking less because we're tracking too many.
Yeah, and you can track too much. It just gets a bit overwhelming for everyone.
Yeah. Okay, guys, 5 minutes to go. We can wrap it up early in case you want to catch some of that game, but I'd again encourage you to ask questions if you do have any, either by chat or by placing your hand up. Jacqueline's got her hand up. I'm not sure if that's from earlier, so if it is from earlier, maybe just pop it down. If you leave it up, yep, okay, it's done. I was going to say if you leave it up, I'll unmute you and you'll feel free to ask another question. It's fine to ask more than one question if you've already had one. Or shall we wrap it up? Well, thank you for getting on tonight, like I said. Oh, hang on, we've got another one. Can I just have that Think Plan Grow site again? I missed it. It's the DD website. So let me text dd.gov. Sorry, it's not that at all. It's this. I'm just texting it to everyone now. Go on there and just search Think Plan Grow.
And websites like DD and that do have lots of useful information.
Yeah. Someone's even found the exact link, which is really handy. We'll make sure everyone gets that one. Okay, and we'll retype it. I love this helpful group environment where we can all support one another. There's that handy link, compliments of Cassandra Craven. Thank you very much. Okay, to wrap up, we have just one more webinar on this financial year, and it's on the topic of planning your successful business. So apart from all this financial consideration, just a solid business plan is a really good idea for a new financial year. This is a lunchtime session. It's on next week, so I encourage you to get on. And if you enjoyed today, encourage others to get on too. It's free, and you can go to this website here to register now.
And planning is always important. I know for my business partners and I are taking 2 days out of our office next week, even though it's end of financial year, to plan the next financial year. And I've got the team tomorrow, a whole day where the whole team's stopping and planning what worked this year, what didn't work, and what we're going to do next year and how we're going to achieve it. So it's important to get everyone involved in having that plan, because then you've got the buy-in and it's not just you trying to achieve everything on your own.
Good idea. I said there was a 1300 number that could be handy, so if you're having trouble finding the Think Plan Grow, you're looking for other resources, you're stuck in business, any reason at all, these guys are here to help. So just ring this 1300 363 711 or look at this very extensive website. It is extensive. It's the only way I can describe it. There is so much on there. It's all good stuff. Go and have a look at it. Okay, just to end, we are in the process of sending you a evaluation form. When we do have slightly lower numbers, we've still got good numbers tonight, but it's really important that as many of you as possible do answer this survey. I know it's very tempting to just jump off and end this and go off and study your workbooks and be studious, but if you could just spend a few moments, Jag has sent you a link, just click on it, start ticking and flicking. It'll only take a couple of minutes of your time. We'd really like your feedback on how you found tonight. So thanks once again for getting on, and a huge thank you to Melanie for 2 webinars in a row.
No problems.
She does this for free, and we really appreciate having her on, because isn't she just a fountain of knowledge, and certainly not stuff I could cover given all the years of financial experience. So yeah, great. I'm sure everyone got a lot out of you being involved.
Excellent. Have a good night, everyone.
There's a few nice thank yous and smiley faces coming through from everyone, so thanks for saying so. We appreciate that. All right, good night, everyone. I'm going to leave the screen on for a while longer so you've got time to do the survey, but I am going to sign off, and I hope to see you online on the 22nd at lunchtime to join our business planning session, final one for the financial year. Good night.